Welcome to the Titans of Industry show. I haven't had Jordan Roy-Byrne on my show for a very long time. I think this is such an appropriate time with everything that's going on in gold and silver. This guy is an expert, a genuine world-class expert on gold stocks. For many, many years, he is one of the most religious analysts in terms of how much time he spends dissecting the sector, looking at all sorts of technical charts, which is one of his fortes, and then some fundamental stuff as well. I'm very glad to have him on the show. If you don't know his website, thedailygold.com, they have a free newsletter, they have a paid newsletter, just a great resource. I know many people that subscribe to Jordan's services. Jordan, thank you for being on the show.
Oh, thank you for having me. Thank you for the very kind words.
Yeah, no, look, I want to start off by asking you what is going on. This is a beautiful, beautiful rally we're seeing, both in gold, silver lately, right? And then the major cap gold stocks or in the major cap silver stocks, they've been moving very nicely. Could you talk a little bit about what's driving this entire move with gold and silver?
Well, simply put, a change in Fed policy is what has been driving this move. And this is something that I've been talking about really since early to mid 2018. And at that point, we go back to that point, and I had a thought about, Fed policy, and when the Fed changes policy, what happens to gold stocks? Because I was looking back, if you look at, there are a lot of similarities to the bear market that we had now compared to the one in the late 90s. There were numerous similarities, and that bear market really ended when the Fed shifted policy. And that's not to say that everything plays out exactly the same, but I was very interested to think, well, how does that work for precious metals when the Fed normally goes from hiking to cutting? And the reason I chose gold stocks is to do that analysis with is because, as we know, gold prices was fixed until 1971, whereas gold stocks, I mean, they've been freely traded for, decades and decades and 100 years basically. So I went back and I looked at the last 65 years or so of, of gold stocks and how they performed when the Fed shifted its policy. And it turns out they tended to perform really well. Like, I think there were 13 instances of the Fed shifting policy from hikes to cuts. And in 11 of those 13 times when the Fed did that, the average gain for gold stocks, I think, was like 170%. The median gain, I think, was over 100%. There were a couple times there in the 2000s and 1960s when they made that shift, and then gold stocks just had fabulous moves. So, a year ago or leading up to this year, I was thinking, okay, well, when the Fed, when they stop hiking and they turn to cutting rates, that's going to be the real catalyst, for this move in precious metals. And it happened really quickly. You go back several months ago to this spring, and I mean, even in April and the beginning of May, it didn't look like the Fed was going to, maybe they were going to cut rates once before the end of the year, and then, suddenly in May, they shifted their rhetoric, and as we know, they've cut rates once. It looks like they're going to cut rates again. So that really explains why we've had the move in precious metals, at least to this point.
Okay, so we've had a big move. I actually published in September of 2018. I said, look, I'm buying an additional 50 ounces of gold eagles. I think this is as close to the bottom as it comes. I think the price that I bought through Miles Franklin was 1,200. A week later, it was 1180, like at the bottom, and then 25% later, we're here at 1550, even more than 25% later. Silver has been a drag through 2019, but then exploded in August and now has a better performance year to date than gold. The ratio hit correct me if I'm wrong, Jordan, like 95 or 96 to 1, and then now it's about 80 to 1. Where are we going with silver?
Well, silver, as you know, it tends to lag gold, and I mean, we've seen the same thing again this year when gold really started to get going. Silver wasn't moving for a while, and then it finally started moving. I'd have to go back and look at the charts, but I really think I think silver started to move after gold confirmed its breakout and was trading in the 1400s. I know that when gold went above the 1420 to 1425 resistance level, silver really picked up considerably. On a historical basis, looking back to 2015 when I wrote the first edition of my book, basically I was arguing that gold stocks were literally the cheapest they'd ever been in history. I mean, it was amazing how cheap they'd been. So we had the huge move in 2016, and then we kind of had the soft correction for a couple of years. But silver actually performed even worse than the gold stocks, because if you look at the gold stock indices, they did not come down and do a double bottom. They did not retest exactly that summer 2016 low. However, silver basically did. Silver, I mean, it didn't quite get all the way down to its late 2015 low, but it did come pretty close. So silver, I mean, historically speaking, if we go back and look where it was several months ago when it made that sort of a double bottom there with the summer 2016 low. I mean, just historically speaking, silver was, I don't want to say it was the cheapest it had ever been, but really in the last 100 years, it was probably in the 98 or 99 percentile as far as how cheap it had ever been. So, similar to the mining stocks a couple of years ago, you're just seeing historical values in silver that you're probably not going to see again in your lifetime. And again, shifting back to the present, once gold got above that resistance in the low 1400s, that's when we started to see capital flow into silver. The last couple of days, silver has been really strong. I'm even a little bit surprised at that kind of move. I think the move that we've had over the last couple of months, I think it's coming to an end. That's not to say we're going to go all the way back down, but I think we're probably going to correct and pause for a little while. But I will say, Lior, one thing about silver, I love to do these historical analogs and these historical comparisons. After the three longest worst bear markets in silver, and a fourth one is that crash we had in 2008. I plot these all on a chart and look for, coming out of that type of bear market or crash, what kind of moves do we get in silver in the next 6, 9, 12 months? Well, basically, the average rebound in silver, if we apply that to where we are now, that would take silver to a price of $24 by the end of March 2020. So that's about 7 to 8 months away. That's not to say that we're going to go exactly to 24. I don't know. We could only go, we could hit 22 or 23. Then maybe we hit 25 or 26. I don't know. That's just what history is showing you what the average rebound would do. It would give us more upside in silver. So, I mean, yes, over the very long term, I'm super bullish on silver. But do I think silver is going to keep going up over the next month or 6 or 8 weeks? I'm a little skeptical. We've had a really strong move. I think silver over the next 4 to 8 weeks, I think there's a little bit of correction, consolidation risk there. So I wouldn't be running out to buy silver right now. But I do think the move we've had over the last couple months is it's extremely encouraging. And look, Lior, in the very big picture, when we're looking out 10 or 20 years, silver, my work leads me to believe that 10 to 20 years from now, we're going to see silver trading over $100 an ounce. Now, I'm not saying that's going to happen over the next year or two, but that's eventually where silver is going. When we get past the 2020s and into the 2030s, silver is going to be substantially, just significantly, massively higher than where it is right
I have a couple of follow-up questions to what you just said, and then another big picture question. One, what leads you to believe in this $100 silver projection? Are we talking about today's dollars, or are we talking about nominally $100 when you predict them are not today's $100? So that's one question with regards to the $100 projection. Secondly, what's the average cost of production for silver? How much above that are we going to see a premium for silver, in your opinion? Because these two determine the real rate return for silver.
Well, in regards to today's dollars or nominal, it's nominally. So there will be there will be lots of inflation factored in. Now, when how do I arrive at this figure? I'm looking at potentially 10 to 20 years out, and I'm looking at, where's the monetary base right now? Where's the S&P 500? Where could these things be in 10, 15 years? And then, because we have historical data for all these things, it goes back over 100 years. And when you look at, okay, where was gold and silver? Like, where were they trading? How are they valued at their peaks compared to the S&P, the monetary base, and those types of things? Like, when you look at those things, gold eventually, and this is my target 20 years from now, gold could go to $20,000 an ounce. And this is just math. I'm not saying, you should put 100% of your money in gold, or you should buy options and do super risky things. Just all the research I've done, looking at a price target potentially 20 years out, based on all this data, $20,000 an ounce of gold is very possible. Obviously, there'd be lots of inflation along the way, so it's nominally, it's not in today's dollars. But when you look at, I think there's been 3 troughs in history, the gold to silver ratio. I think the troughs have come at 16 times, maybe 17, 18, 16 times, 3 times, I think, in the last 100 years. And so when you apply that to a $20,000 gold price, that's how you get, silver trading at 4 digits, actually, 20 years from now. But that was a long answer for a very short question. But as far as the cost of production, that doesn't really factor into why people buy gold and silver for the most part. I mean, silver is, I kind of consider it half industrial, half precious metal. But gold is driven, this is something I talk about in my book, gold is driven entirely by monetary factors. Supply and demand does not move the gold price. Supply and demand in gold, that affects the junior mining companies. It doesn't affect the price of gold because people buy gold for monetary reasons. And the people that really move the price of gold, it's big Western money, it's hedge funds, it's pension funds, it's family offices. And when they buy, they buy millions and millions of dollars worth of gold and silver. That's really the driver of gold and silver on the margin. It's investment demand. So I don't factor in the cost of production into my forecast. But I will say with silver, silver is mined mostly as a byproduct. There's few silver-only mines out there. So as far as supply and demand factors for silver, especially with supply, the production of copper and gold, those levels can influence silver to a degree, since it's mined as a byproduct in most cases. Did that answer the second question?
Definitely. I want to ask you about something that nobody's talking about, or at least nobody's talking about to a great extent, but I find it very interesting. The DXY, the dollar index, is at an all-time high. So the dollar is very strong, and yet precious metals are extremely strong. What do you think will happen once the dollar, reaches its peak? Because unlike precious metals that have no connection to any national currency, they float on compared to not just currencies, but compared to bonds, stocks, and everything else. A country that runs on a national currency cannot allow its currency to become too strong. The same cannot be said about gold and silver. There's nothing holding back their price. They are freely out there to discover themselves. And when you said $100 silver, if you go back to 1971 and you would tell somebody, hey, in 2019 gold would trade for $1,550 an ounce, people would say, no, there's no way, you're crazy. So definitely in nominal terms, these things are not they're not wild predictions. These are probably, if we are going to continue in the same monetary system, very, very logical to assume and to plot and to chart. So going back to my question on the dollar, what do you think will happen next for the U.S. dollar? Because it is so strong compared to other fiat currencies. Even the president of the United States is talking about the fact that it is too strong.
Well, I wish I knew exactly what would happen. Currencies are very hard to predict, but I will say that there's a couple things. First, given everything right now, a stronger dollar is actually bullish for precious metals. And the reason is because the stronger the dollar gets, it's more likely to lead to more rate cuts, not only in the US, but around the world. Like the stronger dollar, it affects the rest of the world. And you know, they just can't deal with a stronger dollar, and so that's obviously, you know, bad for their currency. So the rest of the world, you know, that raises gold demand. But again, coming back to here and now, a stronger dollar is going to eventually lead to more cuts here. So that's why fundamentally why we've seen gold and silver trending in the same direction as the dollar. Although the precious metals have been so much stronger than the dollar's kind of been stable to slightly rising. You know, one thing I like to look at quite frequently is gold against foreign currencies. And another way of measuring that is gold times the US dollar index. So when you look at that calculation, you're basically measuring gold against the dollar basket. So you're measuring gold against, you know, 70% euro, you know, 15% yen, 7% British pound, and, you know, whatever the other currencies are. And when you look at that, that calculation is trading in the 1500s, whereas its all-time high in 2011, 2012 was, I think, 1434. So like if we were looking at gold, when we look at gold against the rest of the world and what gold against the US dollar, you know, basket, that gold price would be the equivalent of like over $2,000 an ounce. Like if we were comparing it to just gold in dollar terms. So gold is, when priced against foreign currencies, it's literally trading at an all-time high in every currency except the Swiss franc, the Chinese yuan, and that's because it's tied to the dollar. So basically, it's like it's at an all-time high, basically in every major currency except the Swiss franc and except the dollar and the ones that have been tied to the dollar in recent years. So and that, you know, that's very bullish for precious metals, because gold against foreign currencies, that usually leads the gold price in dollars. I mean, you go back to the 2000 to 2012 period, there are 2 or 3 times when gold against foreign currencies made a new all-time high. And then eventually, several months later, gold in dollars did the same thing. So I mean, I don't know if it's gonna, I don't think it's gonna happen in a couple months because we're so far away from 1900, but who knows? I mean, if Fed policy stays where it is and we're still seeing rate cuts in 2020, then I think gold could probably retest 1900 by the end of next year. So look, it's very encouraging to see the gold price so strong against every major currency. That's a real bull market in gold. I mean, that's what we want to see, gold going up, you know, whether you measure it, you know, against currencies and commodities and stocks. And by the way, the gold against the stock market, that's a very key ratio to watch, you know, over the coming months. You know, that's going to be important to watch. But again, this is what we want to see as precious metals investors. We want to see gold and silver outperforming all the currencies and other asset classes. That's a bull market. Like when gold is just going up because the dollar is going down, that's a dollar bear market. That's not a gold bull market.
That's a very good perspective. I want to ask you about gold stocks, about silver stocks. You were here in 2016. You saw what gold and silver stocks can do in a period of 8 months. Is this anything close? Does it feel the same to you? Do you feel the same resemblance? You know, I got to tell you, the retail investor is just not there. And I've called major bullion dealers. They tell me, look, nobody's buying. In terms of retail, they're smart money. They're making large orders, but this is not 2011. This is not 2016. The retail crowd is waiting for gold 2000 or whatever it's waiting for, but it's just not there yet. Is this the same observation that you have, or do you think there's mania out there? I'm not talking short-term sentiment or something like that. I'm talking about, do you think that this is at the beginning or middle, or where are we?
Well, I think it's more likely than not that we're probably in a bull market that's going to last, 3-4 years maybe. And I see the gold price. I think the gold price can reach close to 3,000 on this move. Now that's just, you shouldn't invest or trade based on that. That's just my gut feeling over the next 3 years or so. So if that turns out to be the case, then where we are here and now, we've seen the move for the first inning or two in this bull market. Now, the move that we've seen over the last couple months, I think that move is coming to an end. And as I said earlier, I think September, October, early in the fall here, I think we could correct and consolidate for a little while. But in the bigger picture, I think the move that we've seen in the last couple months, it is the start of what could last a couple years really in precious metals. And I will just say, technically, compared to 2016, if we do start to correct here, I will be more happy with that. And the reason is, looking at some of my technical indicators, if let's just say in the next couple of weeks, if gold was going to make another run and go to 1,700 and the gold stocks would break out and go up again, there's a risk that we would be as overbought as we were in 2016 in the summer. So that's not to say that that would lead to a 3-year correction or 2-year correction, but we would have a serious correction if that were the case. So I prefer that where we are here and now, we see the market soften a little bit, it consolidates, it corrects, maybe it goes sideways for a number of weeks. I prefer that kind of move. And look, if we're looking at GDX and GDXJ, if we just look at GDX, for example, it's been trading along this big, massive bottoming base since it crashed in early 2013. And so in early 2013, you have resistance at 30 or 31. In the summer of 2016, GDX rallied back up to 31. Then it had the big correction, consolidation. Now it's rallied back up to 30 and 31. It's pulling back a little bit. So even if the gold stocks correct and consolidate for 2, 3, 4, 5 months, they're potentially setting up a massive breakout past this 31, 32 level on GDX. And if and when GDX is able to break above that level, there's a measured upside target of about 48 or 49. And GDXJ is a little bit behind where GDX is, so it hasn't quite gotten back up to the 2016 peak around 50. I mean, it is dealing with some resistance around 42. But if and when GDXJ is able to break above that resistance at 50, you're looking at a measured upside target of like 82 or 83. So I'm not saying this move is going to start to happen, tomorrow or next week or next month. It could even take 3, 4, 5 months for this move to begin to happen. But if and when we see the stocks break above the 2016 highs, I mean, that's going to set up a massive breakout type move, big momentum to the upside. And I think that, it's more likely than not, we can see that move take place at some point in 2020.
Jordan, in 2016, many people said, look, the rally in gold stocks and silver stocks was a lot of short covering that was happening from institutional. And then it was also related to the fact that the stock market, the S&P 500, went down from January 2016, 11%. It was a correction. What's the correlation that you see between how the general stock market, the S&P 500, the Dow, and the Nasdaq perform compared to what gold stocks and silver stocks can do?
Okay, well, I could talk about this all day, so I'll try to make my answer as short as possible. Usually historically, there are instances all over the place where precious metals have gone up with the stock market, they've gone down with the stock market, they've diverged in both cases. The real key is to look at gold to the S&P 500 and that ratio, and gold is very close to breaking out. I don't think it's going to happen on this immediate move, but that is another thing that I'm watching very closely, because I do want to see gold really noticeably outperforming the stock market, because when you see that on the chart, you see that ratio breaking out to the upside, that means that capital is moving away from stocks and into precious metals. Now, where we are here and now, I mean, there can be times when the stock market goes up, and sometimes gold stocks go up with the stock market. Sometimes they go down with the stock market. I think over the next couple months, it'll be very interesting to see. And the reason I say that is I think the stock market could rebound at some point, and I think we could see gold consolidate and correct a little bit. And so I want to see what would happen to gold stocks in that environment. I think in that kind of environment, gold stocks would actually outperform gold, which is correcting, because the stock market would be rebounding. So, this is something I would, for a real better explanation on this, I would read my book, which you can get for free at thedailygold.com. Just go there and opt in at the top. And I talk about, the history between the correlations and where we are here and now. And I think we could be seeing a repeat of the 1960s with respect to this correlation. But it's really, the correlation is always changing. It can be all over the place. But really, in the big picture, the key is to watch, how is that ratio, the gold against the S&P 500, and that's rallied up to 2 or 3 year resistance, and it started to pull back a little bit. When we see that ratio break out to the upside, that is when you're probably going to see that next big momentum move in precious metals. And again, I think it's more likely to happen in 2020 than at the end of 2019.
Jordan, tell people a little bit about the free letter, the paid subscription, and anything else that you're doing in the Daily Gold.
Okay, thanks. You can go to thedailygold.com. You can opt in at the top there. You can get my updated book. That contains all the best work and research that I've done over the last couple of years. I am going to provide a little update to that at some point soon because I published it several months ago, literally in May, just right before everything started taking off to the upside in precious metals. But if you get the book, you also get on my free email list. So once a week, I send out a free email update where I send out, the free work that I've done, interviews like this, articles I've written, videos that I've published, those types of things. So you can get all my free work if you subscribe to the free newsletter. And also in that weekly free update, I usually contain a chart or two from my premium update. And then I talk about, what am I discussing in the premium updates. And I don't mention company names, but I usually like to tease them one way or another. So that's the free update. The premium update, I charge $150 for 6 months. And my focus is basically picking the best juniors and also market timing in precious metals. We're trying to pick the best juniors. We're trying to get in at the right time. And everything I recommend is basically everything I'm personally buying. So I eat my own cooking, so to speak. So you can find it all at thedailygold.com. I publish a lot of content. There's no shortage of content and analysis there.
Jordan, thank you very much for taking the time today, and let's circle back early 2020, see what's going on with precious metals.
Thank you so much for the great interview, Lior. I really appreciate it.